and in March, the markets have staged a remarkable recovery. What is your assessment of FY25 as far as Indian markets are concerned?
Nifty came down about 16%. 16% is not a correction. And if you think that is big, then you don't deserve to be in stock market. In ECG, if there is a straight line, it's death. In market also, if there is no volatility, what's the fun? So 2025 was a good reminder to people that you have to invest in quality, not on momentum.
What are the kachra stocks as per you as of now?
So any stock where prices are way ahead of fundamental, I believe it's a kachra stock.
Where the markets are going to go ahead after April 2?
So one, it's difficult to predict President Trump. Probably President Trump himself doesn't know what he's going to do next.
Nifty Defense Index was one of the best performing index as far as FY25 is concerned, and as far as the returns are concerned, it has surged 37% in FY25, which is the best performing sector as far as Nifty markets are concerned. So do you think that this sector, Nifty Defense, is going to be the star performer going forward in FY26 as well?
रजत भाई, नॉर्मली मार्केट चकडोल की तरह होता है. जो आज ऊपर है वो कल नीचे होगा, जो कल नीचे है वो आज ऊपर होगा.
Indian stocks are still overpriced. Chinese markets are lucrative to FIIs. So please explain to me at length what is this FII behavior that is driving this, and what is your take on the Chinese markets?
आइकॉनिक डायलॉग ऑफ शोले, जहाँ पे अमिताभ बच्चन मौसी को कहते हैं, इनके खानदान का पता चलते ही मौसी आपको बता देंगे. तो जैसे हमें एफपीआई की बिहेवियर समझ में आ जाएगी, रजत भाई आपको बता देंगे.
US markets is giving you the best returns. So what is your take, and how do you see the US markets?
So undoubtedly over last 15 years, American markets have delivered better return than Indian market.
Hello and welcome. You're watching Republic TV and Republic Business. This is a special broadcast brought to you by Republic Business. Indian markets are on a wild ride from highs in September to the turbulent times throughout the 5 years and the remarkable recovery that we are witnessing in the March. But then there is an elephant in the room, which is the Liberation Day of April 2. When Donald Trump, the President of the United States, is going to announce the tariff on the various countries. So how the markets are going to behave after that, and is it the beginning of another bearish phase for the market? For that, we are joined in by a very special guest. We are joined in by Managing Director of Kotak Mutual Fund, Mr. Nilesh Shah, to decode all the aspects of the market. So thank you, Mr. Shah, for joining us and speaking to Republic TV. So without wasting much time, let me just straight start with the first question. Today is 29th March. We are speaking on a day when we are just 2 days away when this financial year is about to get closed. What is your assessment? Because we have seen the turbulent phase of the market this year. In September, we see that markets hit high. Then we see 5 months of a turbulent times. And in March, the markets have staged a remarkable recovery. What is your assessment of FY25 as far as Indian markets are concerned?
So one, many people say there was a big correction in last 6 months. Well, the Nifty came down about 16%. 16% is not a correction. And if you think that is big, then you don't deserve to be in stock market. Then you should be investing into bank fixed deposits, small savings instrument. There is no return without risk. In ECG, if there is a straight line, it's death. In market also, if there is no volatility, what's the fun? So 2025 was a good reminder to people that you have to invest in quality, not on momentum. You need expertise, not just tips, and you need to be disciplined if you want to make money. I think back to basics is the one-line summary of last year.
Right. And do you feel that this year stood out in certain aspect because of kind of a hue and cry we saw in the media about the markets? It was also the correction and the losing streak of the market was the longest after 1996, right? If I'm not wrong, you can correct me if I'm wrong.
I mean, I'll say In 96, when markets were correcting, investors were more panicky and anchors were more comfortable. This time investors are more comfortable and social media is panicking. I think we are living in the age where everything is getting exaggerated. There's instant results, and which is why there is magnification of every trend. But to be honest, I think investors have shown sharp maturity. They have used every correction to buy. By and large, they have invested in quality. Of course, there is a segment of speculators who have burnt their hands, body also. Those guys have learned the valuable experience that making money is a difficult thing. Trading is not easy. And I hope they carry this message throughout their life and become an investor rather than a speculator.
Right. As a fund manager, sir, what are the biggest lessons that FY25 offered you, and what are the 3 top lessons that you as a fund manager are drawn out of the FY25?
So long back in 2000 TMT bubble, one investor had given me an advice which I have carried till today. Nilesh bhai, don't make those mistakes which I can make on my own. When I give money to you, I expect you to manage it professionally. I think 2025, our faith has been rewarded. As a professional fund manager, I am supposed to invest in real business, not on momentum business.
Right.
Number 2, the faith on process has been justified. There were periods where our funds were underperforming because we invested in quality and momentum was running crazy. There were people who were casting doubts on our capability, saying that look at this fund managers, they are underperforming benchmark index. Today, I'm very happy to say that most of our equity and hybrid funds outperform most of the benchmarks across most of the time period. And finally, 2025 also shows back to basics. Sunil Gavaskar was India's legendary opening batsman. And after scoring a century, he used to take a fresh card. And when someone questioned him after century, when the cricket ball is looking like a football, why are you taking fresh card? And he said, it helps me reset my meter to 0. Scoring century is not sufficient. I still have to continue to play. In fund managers' life also, many a times reset is required back to basics. This buying real business, focusing on valuation, underperforming index and taking criticisms but not investing in kachra stocks, I think was 2025's back to basic lessons for fund managers.
Since you mentioned about the kachra stocks, let me touch upon that aspect. What are the kachra stocks as per you as of now?
So any stock where prices are way ahead of fundamental, I believe it's a kachra stock. Some businesses are good, but price is what you pay and value is what you get. Some prices are so out of sync with reality that you will never be able to make money on them by investing at those valuation.
Right.
There are also counters where there is manipulation. For example, the SME IPO index has delivered much better return than Apple, Tesla, Google, Facebook, Meta over last 10 years. Now, do all those companies deserve that kind of valuation where they are trading at higher valuation than this kind of companies? I have my own doubt. So, kachra stocks are stocks where prices are way ahead of their fair value or fundamentals.
Right. Since you mentioned about this and you have defined it, I want, if a young investor like me or someone, young investor is trying his best to identify those kachra stocks, what should be his what should be the idea, what should be the parameters that he should look at to identify those kachra stocks and not fall in the trap of investing in those kachra stocks?
So there are multiple ways. One is a smell test. For example, we avoided one company which claimed that they are having pan-India presence to service customers. How did we avoid it? Well, we send our salespeople across India to check whether those companies' offices were existing or not. Fortunately for us, they could come back and say, some of these addresses don't exist, forget about the office. It was an easy decision thereafter. I didn't have to go through anything else. The second smell test we have done is quality of investor book. If there are 10 other quality investors, institutional investors investing in that company, you know that there is a proper due diligence done. Now, as a fund manager, I will always do my due diligence, but an outsider probably can take a call on my due diligence and say, if Nilesh Bhai has invested in this stock, theek hi hoga. The third is your own in-depth research. You are investing in company for business partnership. You want to deal with promoter who has good governance practices, who hasn't cheated minority shareholders in the past, who has not taken minority shareholders for a ride. So there are multiple ways to figure out whether this is the business and stock worth buying or not.
Right.
And finally, Warren Buffett said, fantastic thing. You don't buy a business where you can buy and go to sleep for a decade. If you apply that one test, I'm sure you will avoid all the kachra stock.
Right. Absolutely. And sir, let's talk about the elephant in the room. We know April 2, which is a Liberation Day, as announced by Donald Trump. Several tariffs are on the way across the world. The markets are jittery. Global economy is jittery. What is your sense where the markets are going to go ahead after April 2?
So one, it's difficult to predict President Trump. Probably President Trump himself doesn't know what he's going to do next. There's no point in trying to predict him. The best thing in our hand is to react post what has happened. When President Trump was elected and not yet sworn in as a president, one of the global CEO who was here in India, his advice was to follow President Trump's action and not just the words. I think on 2nd April, US time, 3rd April, India time, we'll have to see what action has been taken rather than try to anticipate what action will be taken. I just hope and pray that while calculating relationship with India, US gives weightage to security. Imagine if all the software which Indians wrote for America was actually written in China. Today, America would have been dealing with unprecedented security risk. Their planes will drop dead from the sky, their trains will stop, their banking system will be vulnerable, their power grid will be shut at the will of China. Today, thanks to the programming by Indians, they don't have to worry about security risk. While imposing tariff, they must remember the security risk which they are carrying. कहीं ऐसा नहीं हो कि दरवाजे खुले रह जाए और सिर्फ नाली के ऊपर वो डिब्बा लगाए.
Right. And sir, रात को Donald Trump made a statement and that draws some sort of a relief for Indian investors and the market. That is a kind of a statement which provides relief in the sense that India will be unaffected from the tariffs that he is going to unleash on April 2. What is your sense?
So I'm sure Indians led by Prime Minister and Commerce Minister would have engaged with America and explained to them that look, India is probably the only country which is so open for American investment and global investment. Today there is no Facebook in China, there is no X in China, there is no Google in China, there is no Yahoo in China, there is no YouTube in China. We have given red carpet to all these companies. When we make payment to these companies, it's not accounted in their American accounts. It's probably accounted in somewhere subsidiary outside. But finally, these are all American companies which we have given red carpet to play in India. They should be focusing on opening China's economy for American company rather than engaging with us. Whenever America is partnered with India, it's a win-win situation. Whenever they have partnered with China, eventually they are on the losing side.
Right. And so hypothetically, imagine if April 2nd doesn't bring a good news for India, how markets are likely to behave?
Undoubtedly, today market is trying to react to the event rather than trying to price the risk. And hence, if there is adverse news, there will be reaction in the market. But please remember, it's not end of story for India. Our economy is growing. Our corporates are doing well. And they will figure out a way to deal with the tariff imposed on them.
Absolutely. So, we also saw that March, this month, there was a remarkable recovery in the markets. After 5 months of a turbulent time and navigating choppy waters, we saw some sort of a relief for the investors, respite for the investors. Do you think that it is a sustained relief, or do you think that it's the end of the turbulent times now, and we are going to have this kind of market behavior going forward?
So, as much as my heart wants to say that turbulence is over, my head is very clear, no way. There will be more turbulence going ahead. Geopolitical equations are changing rapidly. India also has very, very high valuations on which we will have to deliver. If our delivery doesn't meet expectations, undoubtedly there will be correction. So to anyone investing in equity market, please don't get deterred by 15-20% move. Please don't invest with 3, 6, 9, 12-month horizon. You are entering into partnership with the best entrepreneurs of India. Give them at least 5-year plus horizon.
Right. Also, I want to ask you, in April, the month that is about to come, there are various studies, and history has shown us that in April, the price seasonality, and April has always been little in the green and has not been turbulent and has given, on average, given 2.4% return. So what is your expectation as far as April is concerned this time?
Rajat bhai, if history was repeating, then people would start putting trades accordingly and history will not repeat. The market is always unpredictable. The adages like sell in May and go away does not necessarily work in every situation. Even in Indian Sanskriti, we have contradictory statements. For example, someone will say, silence is golden, na bolwama na ukon. And someone will say, shout if you want to sell, bole ena bor vechai. Both are contradictory statements, but they are true in its context. So every time there is a statement, sell in May, come back in November, I mean, please use that in the context. There is no predictable pattern in the market, because if it was predictable, market would have already encashed it.
Right, right. Also, one thing that I want to understand from you is FII's behavior. We are seeing that they are little fickle. On few days they are sellers, on few days they are buyers, and that is what is driving the market, right? And also, second part attached to it, I want to ask you, some experts are saying that FIIs are finding Chinese markets much more lucrative, as the valuation in the Chinese markets are down, and Indian stocks are still overpriced. After the correction of almost 16%, Indian stocks are still overpriced. Chinese markets are lucrative to FIIs. So please explain to me at length, what is this FII behavior that is driving this, and what is your take on the Chinese markets?
So Rajat bhai, there are two ways to answer this question. One is in that iconic dialogue of Sholay, जहाँ पे अमिताभ बच्चन मौसी को कहते हैं, इनके खानदान का पता चलते ही मौसी आपको बता देंगे. तो जैसे हमें एफपीआई की बिहेवियर समझ में आ जाएगी, रजत भाई आपको बता देंगे. But on a serious note, we think FPI is one common homogeneous group.
Right.
That is not true. Even in October to December 2024, long only funds, passive funds, insurance, and pension FPIs were sellers. But university endowment funds and sovereign wealth funds were buyers of India. So within FPI, some were sellers, some were buyers. That's why you see that behavior. Second, look at from FPI point of view. India is one market where they have profit. बाकी सारी मार्केट में पैसा ही नहीं बना है. And there is liquidity. यहाँ पे you sold $30 billion in 6 months. Fair enough. Please take your money home. They can't do that in other markets. For example, China had put a condition when they were selling that you can't sell on downtick. You can only sell on uptick. Okay. You can sell in the market, but you can't take money outside of China. And then there are so many other things which China imposes. Fortunately, they control media, so they get away with murder. Now, what is our view on Chinese market? China as a country is miracle. This year, their trade surplus will be close to $1 trillion. There are very few countries, in fact, there are only 2 countries whose export is in excess of $1 trillion, Germany and US. No other country's export has reached the level where China's trade surplus is. So it's a great country, and we have a lot to learn from them. But one thing which we don't have to learn from them is stock market. After a 35% rally from the bottom, Chinese stock market is today trading at a level where it was 17 years before. The media, global media will never say that. They will only focus on last 1 year China has delivered this return. They don't highlight that for 17 years China has not delivered any return. They will say China is doing so well, but they'll never say that China's capital allocation efficiency is so poor that in whole of last decade, 2014 to 2024, the corporate earnings growth for CSI 300 index, the EPS growth of CSI 300 index was just 10% in renminbi terms. This year it will improve to 36% in renminbi terms, 2015 to 2025. Compared to that, Indian Nifty 50 EPS growth was 176% in rupee terms, 10 to 36% in renminbi terms, and 176 to 180% in rupee terms. That's the kind of growth which we are getting, and hence our markets are trading at a higher valuation. And look at the governance. Their richest person, Jack Ma, their most celebrated technological entrepreneur, Jack Ma, was coming with an IPO of a company. And suddenly he made an anti-government statement and he was removed. People didn't even knew where he was. That thing doesn't happen in India because we have a rule of law. Now, how do you price this?
Right.
When you're giving 20, 30, 40 year discounting to India, you know what will be after 20, 30, 40 years. In China, can you predict that? So Chinese market will trade at a lower valuation than India because of our better earnings growth, better return on equity, and better governance. We have a lot to learn from China on running economy, but definitely not worth learning from them as to how they are managing their markets.
Right. Very well explained, Mr. Shah, but I'm trying to understand that you are saying that Chinese markets are not lucrative. If we are talking about FIIs, the notion and the narrative that people are spinning is that the Chinese markets are lucrative in comparison to Indian markets where FIIs are heading. So that is not what's happening now.
In China, FPIs haven't made as much money as they have made money in India. And I'm sure FPIs are smart enough to recognize which side the bread is buttered.
Okay. Let's talk about US market, because I was reading somewhere and that was a kind of advice, investment tip. In order to diversify your portfolio and get more returns, and if you want to make international investments in international markets, US markets is giving you the best returns. So what is your take, and how do you see the US markets? If I want to diversify my portfolio, should I go to the US market? Is this the best market as far as returns are concerned?
So undoubtedly, over last 15 years, American markets have delivered better return than Indian market. But before that, Indian markets had delivered better return than American markets. And over longer period of time, there's not much gap between American market and Indian market. तो घर की दाल मुर्गी बराबर ये कहना बंद कर दीजिए. And there will be always ups and downs in this cycle. There are times when Indian market will do well. There are times when American market will do well. And as an investor, you can have investment in both the markets. There are certain businesses in America like Apple, Google, Meta, Tesla, which are not present in India. Certainly, you should take exposure to them. There are some cutting edge pharma companies in US. Certainly, you should invest over there. But then there are many other companies in India which are worth investing. So don't say it is US or India. I think your portfolio will have space for both US and India.
Right, absolutely. Also, since we talked about the valuation in terms of Chinese markets, I want to understand about the Indian markets. Just before the correction happened in the last 5 months, we saw the correction of almost 16%. Then we saw in the March that there was a rebound of 6%. Do you feel that the stocks which were overpriced are now at a right level? And do you feel that there is a more correction required and the stocks are still overvalued in certain sectors or as far as certain areas are concerned in Indian markets?
So we still believe there are a lot of low floating stock counters where this adage is applicable. आसमान से टपके खजूर पे लटके, उन्हें जमीन पे आना अभी भी बाकी है. Large caps by and large are now trading around historical average. Can they go down from here? Jolly well. If FPIs continue to sell, no one is going to give easy exit to them. अगर मुझे आप पता है कि रजत भाई बेचने वाले हैं, मैं तो 2 रुपए कम करके ही खरीदूंगा. मैं 2 रुपए ज़्यादा करके क्यों खरीदूं?
Right.
So large caps are trading around historical averages. Small and mid caps are at premium to historical average, and hence there is room for little correction. But again, these are market capitalizations. I think if you stay with quality over momentum, high floating stock over low floating stock, and reasonable valuation over expensive valuation, you will make money.
Right. So you're saying that small cap and mid cap still have a room for correction if we see it from historical averages perspective, but not the large caps. It will happen, a correction in large cap will happen only if FIIs and FI will sell. Also, sir, in March we saw the renewed interest or FIIs. Suddenly there was a renewed interest in the market as far as FIIs interest. What drove that sentiment that there was a renewed interest? As far as I know, US Fed's prediction of 2 rate cuts going forward prompted them to come back to Indian market. What is your assessment?
So as I mentioned, University Endowment Fund and sovereign wealth funds were anyway buyers. Second, with 16% correction, India's valuation had corrected. Rupee had also corrected a little bit. So overall, FPI suddenly realized that now Indian large caps are looking attractive. बहुत पहले एक FPI ने मुझे कहा था, as Indians we are generally trying to be disclosing not only the good things but also the bad things about our country. So I told him that, look, our markets are trading at premium to historical averages. And we are also trading at a premium to our emerging market peers. And he said, Nilesh bhai, nazariya badaliye. India is the cheapest emerging market if you take a 5-year view. You are taking 1-year view and hence you think India is expensive. But as institutional investor, large institutional investors, I don't invest on a 1-year view. I am investing for 5-year view. And if you take 5 years earnings growth of India, India is the cheapest emerging market. So there are people who view things in the short term. There are people who view things in the long term. If anyone is taking a longer term call, India is not an expensive market.
Right. And sir, I also came across one thing, that Nifty Defense Index was one of the best performing index as far as FY25 is concerned, and as far as the returns are concerned, it has surged 37% in FY25, which is the best performing sector as far as Nifty markets are concerned. So do you think that this sector, Nifty Defense, is going to be the star performer going forward in FY26 as well?
रचित भाई, नॉर्मली मार्केट चकडोल की तरह होता है. जो आज ऊपर है वो कल नीचे होगा, जो कल नीचे है वो आज ऊपर होगा. सो ये चकडोल तो चलता रहेगा. द डिफेंस कंपनीज वैल्यूएशन आर रीजनेबली हाई. They are pricing in that government is going to increase spending on defense. They are going to encourage indigenization. In our opinion, if you are investing in defense company, invest in companies which are futuristic. टैंक बनाने वाली कंपनी का शायद ज़माना गया. ड्रोन बनाने वाली कंपनी का शायद ज़माना है. सेकंड, दे शुड हैव एक्स्ट्रा कैपेसिटी टू build and sell.
Right.
If you are running at full capacity utilization, आप growth कहाँ से लाएंगे? And third, you should have technological edge whereby you can sell in local market as well as global market. So additional capacity, local and global market potential, and most importantly, futuristic outlook. ये कॉम्बिनेशन में आप डिफेंस कंपनी खरीद सकते हैं.
राइट. एंड सर, पिछले कुछ महीनों में ये भी देखा गया कि एसआईपी लोगों ने जो बंद करना, दैट वाज अ हिस्टोरिकल स्टॉपेजेस दैट वी हैव विटनेस्ड इन रीसेंट टाइम्स. एंड बीइंग अ फंड मैनेजर, how do you see this, and what is your message to the investors, those who were jittery, they stopped the SIPs? Abhi bhi the narrative is sort of circulating on the social media कि SIP करने का सही समय नहीं है और markets में invest करने का सही समय नहीं है. Is it a right time to buy? Is it a right time to sell? Is it a right time to discontinue your SIPs? What is your message and what is your explanation?
So our message to investor is, please follow dharma of asset allocation. And please play according to what you are capable of. In 1987, Reliance World Cup was held in India. India was facing England in semi-final in Mumbai Wankhede Stadium.
Right.
And we had defeated New Zealand quite badly in the quarter-final, where Sunil Gavaskar scored his first and last ODI century. So there were lots of hopes. बट ग्रेहम गूच ने स्वीप कर करके हमें सेमीफाइनल से बाहर फेंक दिया. फाइनल कलकत्ता में ईडन गार्डन में थी बिटवीन ऑस्ट्रेलिया एंड इंग्लैंड. इंग्लैंड चेजिंग ऑस्ट्रेलिया's modest target of 250 plus run was cruising. Mike Getting had scored about 41 runs from 45 balls, and in those days that was a very good run rate. Out of frustration, Alan Border came to ball. एंड पहले बॉल पे माइक गेटिंग ने रिवर्स स्विप किया, कैच आउट हो गए. वर्ल्ड कप एंड फाइनल दोनों चले गए. इफ यू आर ग्रेहम गुच हु कैन स्वीप द बॉल, प्लीज गो अहेड एंड डू इट. बट इफ यू आर माइक गेटिंग, देन रिवर्स स्विप का रिस्क मत लीजिए. स्ट्रेट खेलते रहिए, कप भी जीतेंगे, फाइनल भी जीतेंगे. इफ यू नो हाउ टू टाइम द मार्केट, प्लीज स्टॉप SIP. लोग स्टॉप कर देंगे, स्टार्ट करना भूल जाएंगे. दे मस्ट रिमेंबर that people have lost more money waiting for correction than actually in the correction. If you are mic getting, reverse sweep मत करिए, SIP चलने दीजिए, but asset allocation के format में. Don't bite more than you can chew, but stay invested for longer term. आप अपने आप को पहचानिए and then play the game.
और सर, एक बात ये भी है कि लोग जो नए इन्वेस्टर्स हैं, दे गेट जिटरी अबाउट द फैक्ट दैट ओ पीपल आर लूजिंग मनी, देयर इज अ ब्लड एंड बाथ ऑन द इंडियन मार्केट्स. बट वन थिंग दैट दे आर क्लूलेस अबाउट इज हाउ टू डू द आइडियल एसेट एलोकेशन, लाइक वेयर विच SIP they should start, which stock they should buy, and is it a right time to buy, or the stocks overvalued? Because itna the media, the social media is loaded with information, with multiple strands of information, with multiple school of thought. What is your view on that?
So, एक ignore the noise. आप अपनी फिजिकल हेल्थ के लिए केमिस्ट के पास तो नहीं जाते हैं से कि मुझे हेडेक हो रहा है, दवाई दीजिए. You go to a doctor, you share your symptoms, and then trust doctor's judgment, which will prescribe certain medicine.
Right.
Now, if he says these are 3 days medicine you have to take and 9 doses, you don't take all the 9 doses at one go and hope that I will get cured. You follow doctor's prescription. Same thing applies in financial health. You go to a good distributor advisor, share your investment goal, share your risk profile, and then he will give a prescription to you. Buy this many funds, do SIP in this manner, and let's evaluate portfolio every 6 months. Don't expect instant gratification. आप डॉक्टर के पास जाते हो तो ये तो नहीं कहते कि अब मेरा कोलेस्ट्रॉल आज ही दूर कर दो, मेरा ब्लड प्रेशर आज ही ख़त्म कर दो. आप डॉक्टर पे भरोसा करते हैं. Same way you have to trust your financial advisor or mutual fund distributor. Build portfolio according to your risk profile and according to your investment goals.
Right. And so there is also, I was reading one report, and with this report says that after April 2, the sectors, the export driven sectors, export led sectors like pharma, IT, metals, these sectors are going to be, stocks are going to be volatile going forward, which are export led sectors. What are your views on that? Do you feel that these sectors are going to bear the brunt going forward?
So always remember that market is smarter than everyone put together. Second, it is discounting future. If there is tariff looming, market would have discounted something. In our opinion, within IT services, there are companies which are behaving like dinosaur. There are companies which are nimble. Any company which is able to leverage AI to deliver better, cheaper, faster solutions to their customer, they will do well. जब कंप्यूटर आया तो टाइपिस्ट के जॉब चले गए, कंप्यूटर के जॉब तो बड़े ही थे. So try to invest in nimble IT company which are leveraging AI to deliver cheaper, better, faster solution. In pharma, there are companies which are making APIs in such a good manner, at such a cost and quality, that everyone is a buyer from there. Their business will continue to do well. There are companies which are catering to domestic market, which has nothing to do with exports. They will continue to do well. There are companies which are providing medicines for exports, and they have a good pipeline. They will continue to do well. Please remember that when we send generic medicine, we almost give 40% of what Americans are consuming in a year in generic medicines. But we take just 10% of their spending on medical side. हम तो क्वालिटी दवाई सस्ते दाम पे दे रहे हैं. The higher profit margin is enjoyed by American distributors of pharma products rather than our pharma manufacturers. कल टैरिफ भी लगेगी तो उनको मार्जिन कम करना पड़ेगा. The entire hit is not going to be absorbed by Indian pharma company.
Right. And so we also know RBI MPC is coming on the 9th of April. There is expectation that there will be rate cut this time. How market is going to price in that?
So market is undoubtedly priced in rate cut. Earlier, most people were pricing in at 2 rate cuts of 25 basis point at 6.5 to 6. Now, rate cut expectations have moved further up. So, apart from the 125 basis point rate cut already done, market is now pricing in between 2 to 4 rate cuts. So, there is expectations built into the market, and which is why we have seen 10-year yield going below 660 on a government securities paper. So, market is pricing in rate cuts from RBI much more than what it was pricing in, let's say, 3 months back.
Right. And so, I want to talk to you regarding certain market investors, those who are well known to all the young investors like Rakesh Jhunjhunwala, Radhakrishnan Damani, and all these big sharks of the Indian stock markets. Which is the strategy that stands out for you, and which strategy do you follow? Like, I interviewed a stock market expert, Devina Mehra, a few days back at the same place, and she talked about that why we should not follow blindly Warren Buffett. What is the strategy of Rakesh Jhunjhunwala that stands out for her? And in that sense, who are the people that you look up to as an investor and your strategy you try to emulate?
So these are all the legends, and it is always worth learning from everyone. Their focus on research, their in-depth understanding of sector and company, their ability to hold positions over a long period of time. These are all the learnings for any young investor. But finally, suniye sabki, kariye apni. It's worth learning from everyone, especially the legends. You will always learn from legends like them. But finally, you have to create your own path. Please focus on quality. Do your own homework, your research. And please remember that market में volatility तो रहने ही वाली है. अच्छे से अच्छा कॉल भी शॉर्ट टर्म में नेगेटिव रिटर्न दे सकता है. तो you have to be very, very careful of the volatility. It should not deter you from your path of investment.
Right. Sir, एक narrative ये भी है कि FIIs are selling and they are little reluctant to invest in India is because of the fact that capital gains tax on overseas fund has been little bit of a deterrent for them. What is your take on that? Do you want that to be decreased, capital gains tax on overseas funds to be increased so that we sort of incentivize the FIIs to come back?
See, there are various ways of enticing an investor. The easiest way is tax cut de do, tax exemption de do. The better way will be to increase our earnings growth and governance so good that they all start coming over here. Ultimately, if I am giving them money, they won't mind paying tax on it. If I am not giving them return, then certainly I have to think about giving tax exemption. I think it's better for India to pursue the hard path. Let's improve our growth, let's improve our earnings, and let's improve our governance even further so that FPIs are attracted to invest in India.
And how do you see rupee going forward?
The destiny of rupee is to depreciate. Our inflation differential, our productivity differential vis-a-vis our peer group is likely to keep rupee under pressure. Earlier we used to depreciate 7 to 8% a year. Now probably 2 to 3% depreciation is good enough. More importantly, we'll have to keep a watch on China. When America imposed tariff of 20% on them in President Trump's first term, they let currency depreciate by 13%. As you know, we run large trade deficit with China of upwards of $100 billion. We compete with them in many exports market. We can't allow our currency to become overvalued against renminbi. We have to ensure that we remain competitive to renminbi.
Right. What is the level that you are looking at by end of this year as far as rupee is concerned?
So, do we have ability to price short-term movements of rupee? Answer is no. For short-term movement, you have to figure out what RBI is targeting. They have great strategy of letting market decide the direction, but controlling the volatility. And hence, in the short term, RBI's target range will be appropriate to follow from a volatility point of view. Over longer term, please price in 2 to 3% depreciation of rupee on a per annum basis.
Right. Sir, कोई एक नया young investor who doesn't have clue about the technicalities, jargons of Indian stock market, and he has a corpus of 10,000 rupees in his hand and he's looking out for options in Indian stock market. पहला क्वेश्चन तो ये है कि उसको कौन से सेक्टर और स्टॉक्स में इन्वेस्ट करना चाहिए, दैट्स नंबर वन. और जब even if he has figured out 5 companies for that matter that he would be liking to buy the stock of, क्या 3 पैरामीटर्स होने चाहिए जो उसको देखने चाहिए, like price to earning ratio or maybe some other parameters? I would like to hear from you. What is your advice to that young investor? Which are the sectors that you should be looking at if you are a first time investor? Second, what are the parameters that one should look at while you start your investing game?
So first time investor, my advice will be कि भाई म्यूचुअल फंड में इन्वेस्ट कर, लंबी अवधि के लिए इन्वेस्ट कर, एंड मोर इम्पॉर्टेंटली 10,000 rupee investment is not good enough. You are going to earn. From that earning, please keep something for investment. For most young people, it is income minus expenses equal to savings. But their motto should be income minus savings equal to expenses. लेट नाइट शो की जगह मैटिनी में शो देख लीजिए, थिएटर के अंदर पॉपकॉर्न खाना उसकी जगह बाहर जाके खा लेना, जो पैसा बचेगा उसको हर मंथ निवेश करिए. लिटिल ड्रॉप्स ऑफ वाटर मेक एन ओशन. If you start early and invest regularly, you will be surprised what kind of corpus you will build over a period of time. If you want to invest directly in stock, please write down 5 reasons why you want to buy that stock. It could be based on valuation, it could be based on earnings growth, it could be based on something else. Whatever it might be, write that down and see whether those findings are correct or not. Match that with the results 1 year, 2 year, 3 year, 5 year down the line. You will recognize, are you taking into account right points or are you getting misled?
Right, absolutely. And sir, another question, I was reading one of your interviews, and in that interview you said that we all should adopt China's strategy of Sam Dam Dand Bhed. What is that?
So Vishnugupta Acharya Chanakya wrote that a country should follow Sam Dam Dand Bhed. It's important to achieve objectives using all the available tools. China, for example, has skirted semiconductor chip sanction on them by going ahead and recruiting 30,000 scientists from all over the world. Now, they have recruited talent, they have provided them the right atmosphere. There is ghar wapsi happening of many Chinese scientists. They have picked up young students, fast-tracked their education in Chinese system, sponsored their going abroad, getting degrees, education, working in companies and eventually returning back. There are serious concerns about IPR rights protection in China. We have seen many global companies setting up base in China and very quickly their employees moving over to a Chinese state-owned company or copying product. So China has leveraged Sam Dam Dand Bhed to achieve its objective, to make China great. We should also learn from them.
Last 2 questions, sir. One, someone was telling me that earlier we used to have a philosophy and investing strategy कि किसी भी blue chip company में invest करो और भूल जाओ. That is a long-term strategy. Everyone suggests that invest in the blue chip companies and forget for next 10 years. But that is not the case, right? You should not blindly invest in blue chip because most of the blue chip companies also vanish out of that index. What is your take on that?
So investment is like gardening. आपने मिट्टी अच्छी ले ली, बीज अच्छी तरह से रोप दिया, पानी दे दिया, खातर दे दिया. Now you allow that thing to grow. But regularly you will watch whether the growth is fine or not. If there is a weed, you will remove it. If there is a pest, you will put pesticides on it. You will not check whether the seed is germinating or not by removing the plant. But you will continue to observe it. And that's how over a period of time, a tiny seed grows into a mega tree. Same thing is about investment. Whatever investment you make, you have to observe. You have to observe to see whether your expectations are being met or not. So be a long-term investor, but it doesn't mean that you are not observing your portfolio.
Right. Last question, sir. Next FY26 is about to begin after 2 days. What is your outlook as far as markets are concerned for FY26? That's number one. And second, what are the risks for the market going forward that each investor should be aware of?
So there are so many risks. We don't know which one will come and hit us. But from an economic point of view, India will be witnessing power shortages. The power situation is becoming a little bit tight and there will be power shortages. We'll have to ensure that we ride the wave of technology. because between BPO, IT services, and global capability centers, there are lots and lots of Indians working over there, and it contributes 10 to 12% of India's GDP. It also gives substantial amount of exports to India. Now, if technology is going to automate all those jobs, we could be in serious trouble. From a market point of view, in the short term market is voting machine, flows drive the market. In the long term market is like a weighing machine, fundamentals drive the market. So FY26, if you are taking a call, keep a watch on flow. There could be geopolitical events, there could be local events which could impact flow. And if flow starts, let's say, getting out, markets will correct. If flows continue to come in, markets will rise. So keep a watch on the flow and events which could impact the flow. But at the end of the day, be a long-term investor. Believe in India growth story. We were 10th largest economy in 2014. Today we are 5th largest. And we are on our way to become 3rd largest economy over next couple of years. We will achieve it far earlier than some of the doomsday scenario predicted by many, many reputed institutions.
Thank you so much, Mr. Shah. It was a pleasure talking to you, and what an enriching podcast it was for me, and I am hoping that it will be very enriching for our viewers as well. Thank you for joining us and sparing time out. Thank you so much.